welcome to this session in which we would look at activity-based costing as one of several budgeting methodologies. So we will focus on this section here. In the prior session, we looked at zero-based budgeting, continuous or rolling budgeting, and project budgeting. So I devoted one whole session for activity-based budgeting because I believe it's important or different enough that it requires its whole separate session. Now, if you know activity-based costing, it will be helpful in learning about activity-based budgeting. Most likely, if you are studying activity-based budgeting, you already took activity-based costing. But before I discuss activity-based budgeting, I have to look at basically traditional budgeting first. Then we would look at activity-based budgeting because we can put things into perspective. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Hello everyone. Are you struggling with your CMA exam preparation? Do you feel that your review course is moving too fast, too brief, or not covering topics in depth? Well, if that's the case, at Farhat Lectures, we can help you. We build your confidence through in-depth explanation, not memorization or reading the slides. What we will do is we provide baby steps approach to break down complex topic so you can truly learn, understand the material. How do we do so? We offer video lectures, we offer practice MCQs, we offer true-false questions, we offer exercises, we offer the notes. Understanding the material is the first step in passing the exam. Once you understand the material, you have gained the confidence to pass, and you can pass with Farhat Lectures. What can you do now? Start your free trial. You have a 2-day free trial. Take a look at it. Give us a chance. Your risk is zero. You like it, you keep it. You don't like, you cancel. Give us a chance. We can help you pass the CMA exam. Starting with traditional budgeting, which is the old school approach compared to the new approach of ABB, activity-based budgeting. Traditional budgeting uses the previous budget to do what? To make adjustments. So the base of that is the previous budget or prior period budget or actual cost, whatever happened the prior period to start the budget. Adjustment then made for inflation, projected increases, or other anticipated changes. So this is what the traditional budget. Okay, this is the budget last year. Is this number the same or is it different? Why should it be different? Well, inflation or projected increases or anticipated changes, and we'll prepare the new adjustment. So this approach is straightforward, easy, but it has its own limitation. One, it could be building on an outdated data without revising the underlying cost driver. So what if we assume that the prior year information is now outdated due to technological changes, product changes, industry changes, so on and so forth. Management changes, management structure, our cost structure is changing. Could be. Also, it assumed that all past costs are relevant. Well, we have to question that. This often leads to inefficiencies because we are keeping past cost. And if you remember when we talked about zero-based costing, you have to justify each cost. So the traditional cost assume all the past cost is relevant and will be building on it. Its struggle in dynamic or complex environment. It becomes challenging where indirect costs are significant. When there's a huge indirect cost, how do we allocate those indirect costs in a budget becomes a bit challenging for the traditional method. So some of the limitation of the traditional method is in modern manufacturing and service operation, there's more complexity. We have more customized product, customized production. Now companies now produce smaller specialized batches that meet specific customer needs. So it's the product is constantly changing. You cannot take one brush and go say this is overhead cost and go over everything, treat everything the same. Also, production strategies, techniques like just-in-time, jet production that focuses on minimizing waste by producing only what's necessary. The traditional budget does not work very well with that. So for businesses using this method, indirect cost can be unpredictable, and traditional budgeting may lead to inaccurate forecast and ineffective cost management. So when we have just-in-time system, it's totally different because we're not holding inventory, we're not holding raw material. It works different than the traditional method. Here comes activity-based budgeting, ABB, a modern approach relative to the traditional budget. ABB addresses traditional budget's flaws by focusing on actual activities that drive cost. So what we do here, instead of adjusting past figure, looking at past number and adjusting them, what we do is we forecast cost based on what? Based on activities. So we would say, okay, what activities are required to accomplish this goal, to produce this item, to meet the sales target? And based on these activities, we will draw the budget. So it's activity focused. So cost allocated based on specific activities, not past data like in the traditional method. Why? Because the assumption here, the production is changing, the product is changing, the product is specialized. Not all products are the same. We have a lot of overhead, a lot of different product. So it's a demand-based cost. Production or sales activities determine the demand for resources and subsequently the budget. So what drives the budget? The demand for the production or the sales activity determine the demand for resources, and as a result, we will budget based on that demand, based on that activity, based on that consumption. Here, ABB provide better cost control for business with complex or varied operation. It makes sense because you are treating each activity, each product different because each product might have different activities, and you are assigning the cost based on the activities. So yes, there is a connection to activity-based costing when I talked at the beginning. Now bear in mind, activity-based costing assign cost to activities retrospectively. First, we determine the pool, the cost, then we'll find a driver, and we allocate the cost. Well, here's what's going to happen. Activity-based budgeting uses activities. So we're going to start with the activity, and we are going to go back to predict what should be the cost, should be budgeted to that activity, to that product, to that department. So the activities are the base. And ABCs will take the cost, and we allocate the cost based on the activity. Here it's the opposite. We look at the activity, how much it's consuming, and we work backward. So when do we use activity-based costing? Kind of, you guessed it, when there's a lot of overhead or indirect cost, because we need a better way to allocate this, or we have a diverse or complex activities. And the more diverse and the more complex, the better ABB will help us, activity-based costing, because if a product consuming more activities, we assign more cost to it. Or if we have a wide range of product or customized offering. So the more complex the operation, the more activity-based costing can improve budgeting accuracy. That's great. However, activity-based costing is costly. It's time-consuming. And you have to revise it constantly as the product change, as the activity change, that also need to be revised, just like zero-based budgeting. You have to justify, you have to revise. So it's time-consuming. Let's take a look at an example. Fresh Bakes Bakery plans its monthly budget based on 3 main activities. So the activities are baking cakes, preparing pastries, and making bread. So you have to keep in mind that within those activities, we might have sub-activities, but we're not going to go this far. Just going to kind of give you an idea what activities are. So cost per activities: for cakes, it's $15 each, pastries $10, and bread $5 per loaf. Estimated production: 200 cakes, 300 dozen pastries, and 500 loaves of bread. Now we know the activities, we're going to work backward. So the cakes, 200 cakes, activity cost per activity is 15. The activity is the cakes, making the cakes, so 200 times 15. We'll do the same thing for the pastries and the bread. Then we add up all the budget. It happens to be 8,500. So what we did is we allocate the cost based on actual production needs. What's the activity? What's the cost of it? How many activities are we having? Allocate the cost based on that. Let's take a look at this multiple choice question from farhatlectures.com. Why might a company prefer activity-based budgeting over traditional budgeting? So what are the reasons? ABB uses only fixed cost, making it simpler to implement. Not at all. First of all, it's not simple. It's more time consuming. And why only fixed cost? So that's out, there's no justification for that, and it's not simpler. ABB is not simpler. ABB provides better alignment of cost with activities, improving cost accuracy. Does it do that? Yes, because we start with activities and work backward. This is a good answer choice. Let's keep it. It's better than A, definitely. ABB assumes all past costs are still relevant for future budget. Not at all.
ABB says, let's talk about activities and we'll create the budget based on the activities. So not all costs are still relevant. That's not one of the assumptions that we made. ABB is easier, not at all, to maintain and require minimal monitoring. I don't know about monitoring, but it's definitely not easier to maintain or create. So ABB is more complex, more demanding. Therefore, as we predicted, the best answer is B as in boy. It provides better alignment of cost with activities. What should you do now? Whether you are studying for your CMA, CPA, finance, accounting courses, or any other professional certification, Farhat lectures can help. Invest in yourself. We are here to help, and stay safe.